This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Russian gas giant Gazprom has sharply increased pressure in the pipeline that delivers Russian gas to Europe without prior notice, the Ukrainian state pipeline operator company said on Tuesday. Such pressure spikes could lead to emergencies including pipeline ruptures, and pipeline operators are obliged to inform each other about them in advance, the Ukrainian company said. Russia has continued to pump gas through Ukraine even as the two countries are engaged in war. On Monday, Gazprom said its supply of gas to Europe through Ukraine was seen at 41.7 million cubic meters, MCM, on Monday versus 41.2 MCM a day earlier.
India's crude oil imports in June rose nearly 21% from the same month last year, helped by a steady increase in consumption, while refiners continue to bring in discounted Russian fuel to manage elevated global energy prices, government data showed on Tuesday. It's impossible to ignore the base effects of last year's coronavirus-related restrictions and the impact that has on demand, said OANDA analyst Craig Earlham, adding that the world economy had roared back to life since. But he cautioned that though impressive, the annual data should be taken with a pinch of salt.
Moving on to the top news in the energy sector.
Oil prices rose on Tuesday for a second day on increasing concerns about tightening European supply after Russia, a key energy supplier to the region, cut gas supply through a major pipeline. Brent crude futures rose $1.14, or 1.1%, to $106.29 a barrel by 10:29 GMT, extending a 1.9% gain the previous day. U.S. West Texas Intermediate, WTI, crude futures increased $1.31, or 1.4%, to $98.01 a barrel, having gained 2.1% on Monday. Russia tightened its gas squeeze on Europe on Monday as Gazprom said supplies through the Nord Stream 1 pipeline to Germany would drop to just 20% of capacity.
European Union countries approved a weakened emergency plan to curb their gas demand on Tuesday, after striking compromise deals to limit the cuts for some countries, as they brace for further Russian reductions in supply. Europe faces an increased gas squeeze from Wednesday, when Russia's Gazprom has said it would cut flows through the Nord Stream 1 pipeline to Germany to a fifth of capacity. With a dozen EU countries already facing reduced Russian supplies, Brussels is urging member states to save gas and store it for winter for fear Russia will completely cut off flows in retaliation for Western sanctions over its war with Ukraine.
Next, we have the top news in metal markets.
Gold prices held steady on Tuesday as bond yields fell a day before the U.S. Federal Reserve's widely expected 75 basis point rate hike. Spot gold was little changed at $1,719.77 per ounce by 1001 GMT. U.S. gold futures fell 0.1% to $1,718. Gold is slightly higher benefiting from slightly lower U.S. interest rates, said UBS analyst Giovanni Stornovo. The U.S. Federal Reserve is expected to raise interest rates by 75 basis points at the conclusion of its policy meeting on Wednesday. A hike of that magnitude would effectively close out pandemic-era support for the economy.
Copper prices rose on Tuesday, as supply risks flagged by major producers offset demand concerns, while a softening dollar made the metal cheaper for holders of other currencies. 3-month copper on the London Metal Exchange rose 2.2% to $7,640 a ton by 0709 GMT, while the most traded September copper contract on the Shanghai Futures Exchange closed 3% higher at 58,890 yuan, $8,718.24, a ton. The dollar slipped for a fourth straight session as traders waited on a rate hike decision from the U.S. Federal Reserve and for any clues about whether hints of a slowing economy will prompt a shift away from its focus on inflation. We will now look at the top news in the agricultural sector. Malaysian palm oil futures rose on Tuesday, tracking stronger rival vegetable oils, with the benchmark contract recouping some of the losses from the previous 3 sessions amid bargain hunting. The contract for October delivery on the Bursa Malaysia Derivatives Exchange climbed 3.89% to close the afternoon trade at 3,788 ringgit, $850.47 per ton. Palm oil rebounded due to spillover strength from external markets, a trader in Kuala Lumpur said. Dalian's most active soy oil contract rose 3.29%, while its palm oil contract gained 4.09%. Soy oil prices on the Chicago Board of Trade were traded 1.97% higher.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.